The first one is the curious case, as you call it, of India's K-shaped consumption pattern. Now, this was something that was debated outside of economic conversations post-COVID. So, take us through what is this all about?
Thanks, Siddharth. So let's start with India's consumption story. So if you realize since the pandemic, we have been seeing this K-shaped consumption pattern. This is not to say that India was a very equal society. We always had that gap between the haves and the have-not, but that gap kind of have widened post the pandemic. So what we realize is that anything which was mass market, entry level demand segments, they were not doing that well. But anything which was premium, affluent, luxury, the demand for that consumption items was very strong. Some simple things like booking a trip online, going and staying in a five-star hotel, traveling by flight, buying a premium residential housing, buying a smartphone which is more than $200. So we were clearly seeing that even your luxury cars, where the demand so far was still holding up, whereas your aggregate passenger car sales have been muted. So what we realize is that that dichotomy, it looks like could narrow or has already begun to narrow in FY25. So if I look at now what is happening on the premium or the affluent segment of the consumption, it is clearly showing signs of a fatigue. Why it is showing signs of a fatigue? Because the income levels, and we looked at the listed companies' corporate wages or employee expense, because we don't have a good metric for urban wages in India. And that is showing me that the urban wage growth, which was almost in double digit of 12 to 14% post the pandemic, is now gone back to single digit levels. It is still higher in single digit, but it has definitely moderated. Second is the household debt service obligations have gone up. We have seen pre and post pandemic that the credit growth in the economy has moved higher from 6% to almost as high as 18% at the peak. Only now it has, slowed again to around 14.5% if I adjust it for the HDFC merger impact. And clearly, a lot of household leveraged up, whether they bought a property or they, took unsecured personal loans, and now the debt service obligations are going up for the higher income segment. And lastly, our estimates are showing a very interesting trend that the household savings could have marginally picked up in FY25, which was actually on a dis-saving trend, especially post the pandemic, because household accumulated savings and they were willing to spend. But now, if I look at the low income segment consumption, there are three things where we are expecting a pickup. One is the hope is that the rural demand will pick up because this year the monsoons were very good. The crop sowing progressed well. The summer crop harvest should come into the market from November onwards. Even the hope is that the winter crop sowing could be very good because the moisture content is very high and the water level in reservoirs is reasonable. Second is public capex. So far, the government capex was supportive, and we do realize that construction outside of agriculture is the largest generator of jobs. But now I think there is a concern because we have seen FITD, both central government and state government capex actually falling by year on year. And lastly, I think if you look at the data, you will realize that there's definitely an increase in social welfare spending and stimulus by various states which have gone for elections or are going for elections over the past 1 year. And that is again the transfer of income going to the low end of the population. So, in that sense, consumption, which has been growing at 4% year on year last year, we are expecting a recovery towards closer to 6% this year. But
Okay.
if I look at pre-pandemic average, it was around 6.5, 7. So we are still not going back to the trend growth what we saw before the pandemic. So let me stop here.
If you like the video, do like, comment, share and subscribe.